morning, good evening, good afternoon, traders from wherever you are around the world. It is Sunday, January 16th, and while the U.S. markets are not open tomorrow, I still figured I'd rather get out that weekly prep video for this week because it is going to be an incredible week of trading. I'm already predicting. I think there's going to be so much short-term opportunity to make trades that I can't keep track of all the plays. It is borderline Christmas out there for short-term traders. Even if you're just a short-term swing trader, it is great. The market is at a very important moment, so even if you want this market to crash, you should be potentially excited. There is a lot of stuff happening this week, and earnings are kicking off. So I'm going to be going over a little bit of a recap of what happened last week, what we're looking at, some market levels. I'm going to talk about the top stocks that I'm going to be watching because, look, the market may seem weak to you, but there are some great places to have your cash sitting. And yes, cash is a position, but it may not be as strong a position as you may think. So we're going to sit here and we're going to talk about the market expectations, upcoming earnings this week, headlines, all sorts of stuff. It's going to be fun. I want you to be as prepared as possible for when Tuesday rolls around. So going into last week, we got several things. First of all, we have a scorching hot inflationary numbers out there. CPI came out at 7% year over year, meeting expectations, but still the highest since June of 1982. PPI coming on in underneath the expectations year over year, still breaking a record high, but underneath the core numbers that are feeding GDP, blowing out expectations. And the spread between CPI and PPI is actually very, very wide. And why that matters is that typically means that the price that the consumers are paying is not quite increasing to the extent that the price that the producers are paying, which as a consumer, you're like, great. But as a producer, as these companies in the market, usually translates to margin and profit issues. And we're just entering earnings season, so this is going to be a very interesting time to watch. This is going to be a very important earnings season. Why? Because we're coming up here. We've got a week and a half until the next Fed meeting. Right now, we're expecting a March rate hike from the Fed. And if we're entering a recession or entering an economic slowdown, then it's going to get messy and the market's not going to be happy. So this is going to be a very interesting time to watch. We got some interesting numbers out there. Retail sales were absolutely abysmal, imploded, the biggest drop since last February in December. You have U.S.-Russia talks reaching a dead end, so there are threats out there that people think that we are the closest we've been in a long time to some kind of conflict, or armed or not. You have the Supreme Court blocking Biden's OSHA vax mandate except for healthcare workers, but there's a lot of things in there that they needed it anyway. You have supply chain shocks continuing to grow as China has still been going for a zero COVID tolerance policy and has been shutting down ports again and shutting down port cities. So that's going to be an important thing coming. You have Jamie Dimon, an idiot, but also CEO of JP Morgan, coming in there saying he forecasts 6 or 7 rate hikes this year. And that's causing a little bit of interesting movement. So you have a lot of stuff going on there. JP Morgan itself expects a $2 trillion runoff from the Fed balance sheet from 2022 to 2023, which if you watch my balance sheet video, which is, I think, a pretty good little starter video, actually talks about the expected runoff of the balance sheet. And that's about actually the sweet spot that we came to as well. So we'll see if they can actually do that, though. Last week, equity inflows. However, despite the weakness that we're seeing, Goldman Sachs gave a little numbers, and the equity inflows are still relatively strong. And Goldman is still out there harking buy. Now, they could be doing that because they have some positions to offload still. Do not necessarily trust those banks, but they are still harking it buy. And on top of that, we've got some big storms hitting in the U.S., some big winter storms. So there's a lot going on. It was a pretty impactful week last week. And more importantly, looking at the technicals, we put in this lower high. We couldn't hold above this level, and now we're returning back down to what is these ascending lows here that we keep bouncing off of. Now, they did buy the dip Friday going into the close there, which is pretty interesting. So those buyers are still lurking. They're still being aggressive. You've still got several people in there not preaching doom and gloom, and the fact that so many people out there are preaching doom and gloom, you need to be a little bit of a contrarian there and get a little worried for a squeeze. Now, the Qs did drop down, kind of reached a nice little support level here, pretty decent inflection level and are holding, though again we put in a lower high, not quite a lower low that we did in the weekly level in general. And then we look at the value plays, well, they're still just kind of here. They're not really moving. Lower high as well, below their moving averages, failed off the 20-day, and that's where we are technically speaking. Looking at the rates here, we had a nice little pop in rates. We feel poised to move higher, and if rates do continue to ascend, then we will likely see a further weighting down on tech. And that's going to be pretty interesting to watch. And then last but not least, let's take a look at some of the internals here. Percentage of stocks trading above the 50-day SMA. Took a nice little spill on Friday, moving down for some lows. But meanwhile, you look at the 100 dropping as well, and the stocks trading above the 200-day. So there's actually some broader market selling in there in the market. Now, we did open at a pretty significant low there on the advanced decline and slowly, steadily gained our way back up. But we're still a little choppy here. It's still feeling a little shaky in terms of the old market internals. It doesn't quite feel the same as the last time we returned down here. The SPY is below the 50, the Qs are below the 50, and the IWM is below everything. And look, we went a full calendar year without our market touching the 200-day SMA, so it is overdue. I would love a pullback. That's great for anyone, because even if you're a long-term investor, you shouldn't be babysitting your account. You just want to be accumulating as we drop, and that just means you get things cheaper. And as a day trader, you need to be flexible in your direction anyway. So as a trader and investor, a dropping market is perfectly fine, because it just means you get more. So that is our situation going in here. Now, looking at the SPY, maybe zooming in a little bit, I'm going to go to this 4-hour chart that I like to do and then zoom in a bit here. First of all, you can see the ascending lows. This is what we're looking at as going to be our first kind of line in the sand here. Now, this also depends on where the futures open up on Tuesday. It depends on if we survive this 3-day weekend without any jarring headlines, and then I would expect us maybe to even gap up. But this is kind of our line in the sand, in my opinion. I wouldn't want to see us get through weekly lows either. If we do start moving higher, 470 is where we cannot hold above. So you've got your bigger macro levels there to be watching in the SPY. Qs, meanwhile, have been the weakest out there, have been leading us. If we drop this kind of 374.50-ish, which is an inflection point from all the way back in August, then 370 is your next big level, because this was a level back in the summer, and this is where we bounced off of in the latest dip. Now, if we do start ascending, 390, and then next up 400. Those are the levels that I'll be watching on the larger scale. IWM, I mean, we don't even need to look at the 4-hour. You can just see it on the daily. If I can pull that up, there we go. You've got the major level, in my opinion, which is down here, a little bit of a cliff, and if we start making our way higher, I'd like to see us get over the 20 and then the 200. So those are the levels that you have in front of you. Can we do it? That's going to be tough. Volatility, while trying to pop, is still staying relatively compressed. We think that this is going to be a stock pickers market this year, and we think that there's going to be some very interesting movement, probably higher volatility, but who knows? No one knows where this market is going to go. So that is your market situation going into the week. It's going to be great. No one knows where the market's going to go, but set your levels, manage your risk management, and I saw someone, I can't remember who it is, I apologize, but someone gave a really good apt analysis for trading this year. It is measure twice, cut once. Really make sure you are measuring your trades and making sure you are entering these smart trades. Now, what are the economics this week? It's pretty light, actually, which is good, because that means that maybe the market can be a little more organic. We are entering the Fed blackout period. The Fed governors are not going to be out there chirping anymore about what they want going into the Fed meeting next week. We do have a few headlines. Tuesday, you'll have Empire State Manufacturing Survey and your housing market index. Who cares? Wednesday, your housing starts and permits and red book store sales, and then the 20-year bond auction. Who cares? And then Thursday, you've got jobless claims, existing home sales, natural gas reports, and the Fed balance sheet. For the most part, who cares? That stuff's not going to be jarring our market and moving it by any means. So I think we're going to have a relatively quiet, hopefully, market in the way of headlines. Now, that is the economics. We do have some pretty solid earnings this week. We are going to be kind of wrapping up some of the financial earnings. But before I dive into that, let's take a look at our commodities. You've got oil being an absolute stud. No surprise here if you've listened to us at pretty much ever since we got down to this line. Now, we did get a little shaken out here, but re-entered as we reclaimed the 200-day. In another play via energy stocks. We've been very bullish oil going into this cold winter. Lo and behold, we've still been ascending. Energy crisis still roiling in Europe, in China, partially in the U.S. Energy prices are still continuing to climb. Now we do have China and several other countries soon going to be doing a special release from their reserves. It may help temporarily, but I don't think it's going to be enough. So that is our oil situation. Taking a look at gold, continues to chop around while the dollar had a nice little drop. That's a very odd print here for the dollar. I apologize. Can I correct this bar? Let's just remove the bar entirely. There you go. So the dollar had a nice little drop here as we had, the scorching hot inflation numbers. Dollar hadn't moved prior to that. And then we got a nice little rebound. So we'll see if we can rebound. Dollar feeling the pressure a little bit, but if the rate hikes are going to be aggressive, you would expect the dollar to rebound most likely. But if we do this into an economic slowdown, then you have the competing factor of we may cause a bit of a recession. So those are your competing headlines there in the dollar. And then taking a look at some of our favorite things out there, our glorious Bitcoin. Moving sideways here, still flagging around. I'd like to see it maybe start making a leg up this week. If it starts reapproaching 40,000, I'd be very cautious. Same with Ethereum. It's holding above its 200-day. I don't want to see it reapproach 3,000. This has been a little scary because it's been moving, first of all, with the market to an extent. And second of all, the market's going a little risk off right now. It's going into safety. And Bitcoin and Ethereum, that's not it. And so if that continues to be the trend in this market, they might see a little more volatility coming their way. So that is our cryptos. That's our commodities. That's really what we're looking at there. So what else am I looking at? And what are the stocks? Just get on with it, Nick. What are you trading? What are you looking at? What are the stocks? What's in play? What are you going to make money on? Let's talk about it. So first of all, with the earnings coming up, like I said, we're going to finish off some of the big financial earnings on Tuesday. Goldman Sachs reporting on Tuesday morning. Now, we just had some financial earnings. JP Morgan, not the most stellar earnings under the hood. Citigroup, better. Got dragged down by JP Morgan, arguably, but that's why they dip bought. And Wells Fargo actually had some sizable good earnings, but you can argue it's because they're not allowed to have trading desks and a lot of other things because they're such shitty companies that the bar is set pretty low for them. Now, going into Tuesday, like I said, we have Goldman Sachs on Tuesday. We have Charles Schwab reporting on Tuesday, who's been an absolute beast lately. You have Bank of America and Morgan Stanley reporting on Wednesday, and then you have a slew of smaller regional banks. And I'll give you these earnings coming up every morning on our morning market analysis, and then I'll also mention them during our Vant Rant podcast show. So you'll be hearing a lot of the major earnings at least as they approach. Some of the other notable earnings to know about this week. Tuesday after the close is JB Hunt, and why I'm interested in JB Hunt, it is the trucking company. They do a lot of shipping, a lot of transportation. I want to know how freight's doing, and I want to know about that. It's kind of like how Mike likes to look at UPS and FedEx almost as a loose gauge for how the economy is doing. JB Hunt is kind of loosely in that category as well. Wednesday, you've got a couple other companies reporting. You have Procter and Gamble, a company that I've really liked as a staple play with dividends, though they've had a little bit of a weak start here to the year, surprisingly, but that is one. You also have United Health, a big boy in the healthcare sector. Now, healthcare has had a bit of a rough start to this year. So this is going to be an interesting moment for healthcare. Is that going to be able to turn it around? Could United Health help this industry? We will see. Wednesday after the close, you also have Alcoa aluminum, been doing very, very well. Inflation and commodity prices continuing to rise. Alcoa is kind of the unofficial start to earnings season as well. You also have Kinder Morgan, which a lot of people like to look at as well. United Airlines. Now, we did get Delta Airlines earnings last week, and they were relatively good. Nothing to shake a stick at. And so, you kind of got a soggy reaction. United Airlines follows it up on Wednesday. And then Thursday, you have American Airlines. You also have a couple other companies out there, UMP, Union Pacific. So that's railroads. Again, freight, shipping, transportation, moving goods. I want to know how that's doing, know about their guidance. I think this quarter in earnings, guidance is going to be key, how they're dealing with labor supply issues, margin pressures, and overall energy supply, or energy prices as well. That's going to be a lot of the key focuses for us, I think, this earnings season, and probably the market. Now, Thursday after the close, you have Netflix earnings, and Netflix has really dropped off here since their kind of peak out last November. So this has been a rough time for Netflix. They've re-entered this high volume node from last year. So this could be an important moment for a stock that helped carry the market for a time there last year. So going to be watching Netflix. They just announced that they're increasing the pricing in US and Canada plans, so that gave them a little pop on Friday. We'll see what happens there. And then you also have CSX, if some people like trading that on Friday, is Ally. The earnings will then really start to ratchet up in the following week. So That's your earnings coming up here this week. It's going to be very interesting. There's going to be some good ones. What are some of the other stocks that I'm watching out there? So first of all, let's just talk about some of the breakouts and the larger moves. Ford, I still like Ford. It's been holding up fantastically, especially compared to the market. I thought we had a fake breakout here when we could not quite maintain ourselves. If I move to say a 30-minute break ourselves fully out of this range, but we managed to hold up and actually recover nicely. So I'm going to be watching Ford to see if that continues. This is a really hard move for Ford, so I don't expect this to be a long-term position, but I'm definitely going to be watching it very closely. I also took a little fun YOLO trade, and I mentioned this in the morning video on DWAC. This is that Trump SPAC. Now, there is risk in this one, obviously, but it kind of quietly has just been kind of taken off here and perking up. And I haven't seen many headlines. I think it's maybe the anti-Biden play. Who knows? Regardless, it's really starting to pick up here. I'm just going to keep a loose eye on this one this week as well. Some of the other stocks that have been moving, XPEV. Now, while the entire EV industry, NIO, has had a rough start to the week, Tesla obviously been really, really shaky. You see other companies like Plug, Abysmal, Rivian selling off. XPEV, meanwhile, is holding up here, and it feels like it's about to break out. That is a very big difference here. I think people looking for returns might see this, and if it gets through 50 this week, I'm going to be very interested in XPEV. Some other stocks in play out there. If you look at the semiconductor sector, you know I'm not a huge fan of NVIDIA or AMD. I feel that they've kind of had their moment carrying this market. I've been watching stocks like Micron, who are in the process of breaking out for 52-week highs, and Intel, who also are kind of wrapped up in a dividend/consumer staple play, both of which sitting over the 200-day very nicely. Now, Taiwan Semiconductor, a big competitor out there, reported earnings last week. They did very, very well. So I'm going to be curious to watch how Micron and Intel do. I think they're going to be very strong and continue to be strong, but we'll see. Another stock that was surprisingly strong was Meta. Meta's refusing to drop out here. They're changing their ticker sometime this quarter. I want to see them get through these moving averages first, but I'm watching this stock very, very closely just to see if, since it's been underperforming the last quarter or so, I want to see if this one picks up, and if we see some rotation into here. It's going to be unlikely, but you never know. Some other stocks I think that are going to be in play. We got a headline over the weekend. The WHO has approved use for 2 drugs and is now heavily suggesting the use of these 2 drugs during for COVID patients. And let me see the name of those drugs. Here we go. Glaxo and Eli Lilly, they're the drugs, and that's the companies I'm looking for. I want to see if I can find the name of the drugs. You can find them yourself also. They're kind of complicated names for a lot of people, so you don't have to worry. Baricitinib, I believe is how you pronounce it. I believe that's the Eli Lilly drug, so maybe get a little rotation in here this week. Who knows? And then GSK is another one that was also mentioned in this in terms of one of their drugs was suggested. Now, GlaxoSmith been a little stronger, but these might be 2 interesting stocks that maybe a lot of people aren't looking at. Also, looking at Walmart. I think Walmart could be poised to take over for a little bit. It's had a very choppy year. It's been holding up very nicely, and it almost tested a breakout here on Friday. So I want to make sure this isn't a fake breakout. I want to make sure these moving averages hold, but I really like how this one's starting to wedge up here. It put in a higher low, didn't even reach that 136 bounce point. So I'm going to be watching Walmart very, very closely. You also have stocks like well, let's just talk about my favorite ones. And these are the stocks, if you watch my morning videos, you know I mention these every single day, so I apologize if they're a little repetitive. But the consumer staple safety dividend plays. And these stocks are still doing well. That's what I'm saying. The dividend plays have been hot. I've talked about them in my beginning video for the beginning of the year, some of my favorite sectors. I've talked about them every morning, every Vant rant, and they continue to do well as a consumer safety kind of staple play. PepsiCo, Mondelez, General Mills, Coke. And then Mike brought another one to my attention, Keurig Dr. Pepper. Look at these stocks. There is opportunity in the market, even if you're a long-only trader for some reason. Although some of these, look, are getting a little hot on our side. We may see a pullback. I'm not saying that these are buy forever and hold. In fact, I'm not even telling you how to trade them. But these are some of my favorite in this sector. They pay dividends, some of them very healthy. You can even just look at another dividend play like Altria, and that pays a pretty decent dividend, and that one's going crazy. So high dividend, decently safe consumer staple plays doing very, very well right now. That could be a continuing trend this year. We'll have to see. Some other plays out there that are doing pretty well. I still like Disney. I don't care about the Guggenheim, downgrade that they got on Friday. They're kind of a cyclical play. They're a reopening play. They've been undervalued. I want to see them get back up here, and once they do, it's go time for me personally. There are also some industrial plays that have picked up the slack. Caterpillar had a very good start to the year. I think that could hopefully continue. And John Deere, Deere Co., which is holding up here at a very significant resistant level. I want to see if that breaks this year as well and keeps up with Caterpillar. Some other stocks I'm watching, I'm still watching China plays. I think Alibaba could hopefully, if it holds above the 50-day SMA, continue to see a little bit of rotation here. China's kind of quieted down with a lot of stuff, though there are concerns with China economic slowdown. These stocks have really gotten hammered over the last year. If you see here, we're really at some serious lows here. And I think you might get some bottom feeders. You've even seen Charlie Munger double and triple down in his positions in this stock. So some of these might be pretty interesting. Verizon I still like as a 5G play and a consumer staple play. This is more of a very long-term, just collect the dividend and hold play, personally, in my opinion. Some other random stocks out there. Look, I think that there have been some great shorts in the overperformers. Costco, really seeing it bleed off. Home Depot, really seeing it bleed off. Lowe's as well. Dollar Tree even showing some chinks in the armor there, getting below the 50-day again. And I think these things are going to continue to see weakness. I think these are almost mini bubbles in a way. If you think, look at the charts, I think we're going to see them continue to show weakness, especially with the abysmal U.S. retail sales numbers from December. So I have no reason to buy these. In fact, I've been looking for the shorts more in a lot of these kind of plays. I still like IBM. I like it because of this kind of 10-year descending high here that you can see. We're still sitting here very nicely doing a bit of a battle. We had a harsh drop on, I believe, a downgrade, but they bought that dip immediately. So honestly, if it holds over 135 this week, I think it could be time for me personally. I'm going to be watching those plays as well. And shout out to Mike and Bornelom. They're kind of Viacom Discovery stocks really getting a good bid here this year so far. We've seen some value rotation here into these plays. They've really picked up. I want to see if these plays can continue from their harsh drop last year. So those are those plays. Stocks that I've admittedly said that I don't want to own, but have been still doing well. The airlines are picking up, so maybe that's interesting to a lot of you. Not for me personally. Neither are the cruise lines, though. To be fair, they are getting above the 200-day, at least on RCL, so it may be a good short-term trade. Who knows? Some other reopening plays got some love on Friday from some headlines, and that is the casino play. So Las Vegas Sands, Wynn. If I pull that up, Win. Also MLCO. I like MLCO just from a technical side. I like that it's breaking this 11. We'll see if that can continue. Volume's going to be a big deal for stocks this week. But I like those plays, and we'll see if that can continue as well. And then last but not least, some sectors that I'll mention. Maybe some commodity plays. So first of all, I'm going to watch U.S. Nat Gas. Got a little pop here. Drop back to the 200-day. We've got some serious cold weather in the eastern U.S. I think we could see U.S. Nat Gas maybe pick back up a little bit. Steel, I'm going to watch United States Steel is my play there. It's continuing to consolidate and flag above the 200-day. I think commodity prices could continue to run. And I'll just watch and monitor the wood prices. I'm not going to be trading them personally, but I like that I don't like that we're seeing this rise in prices, but I like this action. I think it's going to bring some opportunity there. Look, this video has already gone over 20 minutes. It's supposed to be a weekly recap and prep video, but there's so much opportunity out there that I wanted to really try to make sure that I'm addressing a lot here. I mean, I could even talk about stocks like Tesla. I mean, Tesla's really battling in here, and I'm not too eager about Tesla, frankly, in either direction. I don't have an edge in this one, and it's going to be tough. I definitely watch a stock like Apple, who's been overperforming in tech, hasn't even touched their 50-day. I think there's going to be some very interesting outliers in this week and in this month, quarter, year, whatever. It's going to be a stock pickers market. It's going to be great. There's going to be some great opportunity in trading this week. I think I'm going to wrap it up here, though, because I don't want this video to go too long. But I just wanted to really get across that there is a lot of stuff happening. And this is going to be probably a quiet week in terms of headlines, so we can focus on our trading, get our plan ready, see what the market provides, and get geared up for the FOMC next week. So I will see you all on Tuesday morning for the morning market analysis, and then we'll see you every day for the Vant podcast. I'm excited to kick it off this week and continue grinding. It's been great talking to you all. I hope you appreciated this video. I'll see you next time, and as always, safe trading.